Okay, hello everybody. How's it going? This is 50 pips, 29th of September 2013. I'm not making any trade calls or recommendations. Everybody is responsible for their own trades, and basically we're here just performing some technical analysis for educational purposes only, just to get us ready for the week ahead. Now, keep in mind this week's going to be pretty busy because we got a lot of stuff coming out in terms of data. We've got the PMIs out, we've got ISM, heads up, we've got the BOJ, Bernanke speaking. We're going to have the ECB and the RBA with rate decisions. What else? We got unemployments, non-farm payrolls out of the state. So basically there's a lot of event risk this week. So I think probably as no surprise, we'll see what's going to happen to the dollar based on all this U.S. economic data coming out, but also don't forget the RBA and the ECB. So what we're going to do here, I'm just going to focus on four things very quickly. As usual, we try to keep these short and sweet. Reminder, next Sunday is the first Sunday of the month, so we're going to have the full 1 hour live session. So if you're interested in that, everybody's welcome. You don't need to register. You don't need to pre-register or anything like that. I don't want your detail. I don't need to have your email address. There's a link on the blog. You just show up next Sunday, and it's live. Everybody's welcome, and there'll be a post reminding everybody where to click and all that stuff coming on. So first things first, what's going on the ES? Well, basically the ES, we've had a bit of a move back down, and we printed back into those, we're printing those 1720s, and then we've seen what is effectively a pretty orderly move back down. All the way back, we filled this open gap, and we're hovering around pretty much 1685s, right? After having filled the gap, trying to base here. Now, this is quite an interesting level because what you can see is basically we've moved right back into this previous resistance zone that was sold quite aggressively, basically the 1666 into 1685. So this previous resistance zone that once we broke above tried to hold as support. So previous resistance holding a support. You see the wicks here holding a support for the new print high, and then we just couldn't try it again. We couldn't hold below previous resistance acting as support. Once we broke below, it acted as resistance. We got that other press down, and then bam, we're right back up, and here it's acting as support. So it's a really important level. So I think what you need to watch out for is going into the week that any weakness, this is a strong support zone. Now furthermore, this happens to also line up with two interesting levels. So basically it's lining up with the 50 back of this latest leg high, 1624 into 1725s. So the 50 back is coming inside this zone, and also a level that you might have seen people talking about this, but a lot of people tend to look at this also on the ES here. It's just basically a 50 moving average SMA, and you see that we've got all this confluence, the support zone, the 50 back, and so again, I think this is an interesting level to keep an eye out for. If you want a line in there, that's pretty much 1675s. So what I would say is any sell-off early in the week, what I would keep an eye out for is how action is going to behave around 1676s. Now, around there, I think that a move, pretty much a 10-point down into 1666s or back up into pretty much 1686s could be very, very quick. But this is going to be the pivotal zone to watch out for the week. Keeping in mind, the range I'm looking at is high range right there, and we've got the low range as that dip low. But really here is going to be a very interesting zone to keep an eye. But unless we break below that, it should hold a bit. Now keep in mind all that event risk. Then gold, what's going on gold? So gold, we talked about these 1300s still defending. A lot of interesting buy zones for intraday trades here also. And basically what's happened is effectively we talked about this move back down into the 1200 and this failure to break below the 1200. This is what we were saying. We're on Twitter. We're saying, we expect people to look back on this towards the end of the year and saying this was a bargain price on this failure to hold. And what we were talking about a range shift to try and get a move back up into 1500s. And this is in play. It's a bit sloppy. It's being choppy, but it's in play. So what's happened? We've moved back into these 1300s, managed to break above. 1400s got sold, and now these 1300s 1300s are being bought. So this is really the chop zone going into the week. 1400, 1300. We really need to start to see daily closes outside this level and some kind of momentum for either to see a press possibly continue into the 1500 or into the 1200 outside of that range. But the preferred scenario here is that short term, as long as we don't get a daily close below these 1300s here, the preferred scenario is for rotation back up to try and make its way back into these 1370s, 1400. Euro and cable. Let's do cable first. Cable, this is our chart, no change. We've been talking about that 160 being a bull bear line short term. So basically, we've been talking about this rotation up into the 163.50 for quite some time now, right? And we were, if you remember this weekly chart, the way we were posting it, especially when we were catching all these bids here, we're trading all the long side. We said heads up for the 57.50s. That's the only matter that's the only level that counts. That's the only level that counts. That's the confluence with the 200 on this weekly close above there is going to give us even more confidence that our scenario for the move back into 63.50s is in play. Once we broke above what we said, and again, some people are saying, why aren't you more active on the blog? Because there's not that much to say, right? I'm not going to keep on adding charts if there's not much to say. What we said is basically once we broke above, it was all about holding above those 57s. And once we started trading aggressively above them, we even got that gap. You can go on the daily, and it's fairly clear, right? We said it's all about 160s. That's the, bull bear line. As long as it holds above the 160s, the rotation is in play, right? So again, a lot of very interesting opportunities to get long into that 160, and the rotation is holding. So there's really no change as far as I'm concerned going into the week, unless we get daily closes below these 160s. The path of least resistance is to try and take out these recent highs and continue the grind higher all the way back up into the 63.50s. Now keep in mind that this move has been very extended, right? So it would be healthy to see some kind of retracement in the market. So when we do get that retracement, I wouldn't try not to get spooked by it, or don't. It doesn't mean that the bull case is going to completely change unless it's on a tape bomb or data, right? It would be healthy to see some kind of retracement, but as we stand, it's moving up in extensions, and as long as it doesn't trade below the 1600, then the path of least resistance is likely to at least try and take out these highs, and most probably continue to move into these 63.50s. If we break and we get a daily close below these 1600s, well, then it would be healthy to see a retracement. I wouldn't be surprised to see a move all the way back down into this fill here, or even into the 57.50s. But the levels to watch, they're not that many. They don't change. That's why we haven't really updated the charts, okay? Now, last but definitely not least, Euro. What's going on Euro? So Euro, same thing. The charts being the same, as we say, no change in play. 134.50s is the bull bear line, okay? Now the outlook we have is similar to the one on cable. This is still in play. We've got this big move here that's holding all this 50 back, and we're looking for a rotation back into the 140, 141 level, okay? And that's still in play, especially as long as we hold above the 134s. Now, short term, and if we go on the daily, you can see there's not a lot to say. This has been moving in a chop range, right? We said 34.50s bull bear line, and it's not moving. It's been stuck, right? It's been stuck. It's been stuck in a pretty much 100 pip range. And as long as it doesn't break outside of this range, well, there's not a lot to add to the commentary, right? We've got a lot of event risk this week. What I would say is keep them to the downside, 34.50s, as long as we don't break below and get a daily close. This is holding a bid tone. To the upside is those recent highs, and if we get a daily close above those recent highs, which were basically, what did they, let me just double check here, what they printed into 130, 35, 60, 70s. If we break above that, then expect to see that continuation rotation higher into 37s, 38s. Again, it would be healthy to see some kind of retracement. The bull bear line is those 134.50s, but don't forget the importance of the 134s, okay? If you go back on a weekly, you can see those 134s. What's going to be happening now on those 134s, it's not just because we break below 34.50 that it has to die, right? As a lot of people like to say, is that whole 34.50 into 34 is going to be a massive support zone, because that's what's going to be protecting that 200 weekly moving average, which is now is the bigger bull bear line from a cycle perspective on the weekly chart. So clearly we've been ranging, we're in chop ranges, we need to see some kind of a breakout. And again, it would not be surprising for us to see that this week, especially since we've got all those PMIs, the BOJ, Bernanke, ECB, RBA, and we got the non-farm payrolls. So I think we should get some volatility this week. I think we should get some breakouts and some continuations this week. At least that's what we're hoping for, because as traders, what we want things to move, because if they don't move, there's not a lot we can do, okay? So guys, I'll see you tomorrow for London Open. Have a great one. Thanks a lot for listening. If you like the content, don't be shy about sharing it. And again, next week we've got a full 1 hour live session, so just check the blog for the link, and everybody's welcome, and we can do all the charts, any pair anybody has to ask. As long as the platform supports it, I'll review it, no problem, okay? Have an awesome one. Take care, guys.